If you're looking to figure out what materials you should sell this week or hold this week, now is the time to do it. Our weekly report is going to give you that information, up-to-date market news, pricing. Let's get right into it. We'll talk about it inside. Hey scrappers, Tom here, and today is Wednesday, July 12th. All warnings, this was pre-recorded, so if the market changed this week, we don't have a weekly report talking about the prices this week. What we're doing right now is a 6-month recap on the first half of this year, showing you some of the price changes, just looking at the graph from a different way. We'll talk about some of the reported prices, but don't forget, if you're looking to learn prices about today's scrap market, go to the iscrapapp.com. Our price page has all types of different prices on there, hundreds of prices. You're able to report prices. If we can pull up iscrapapp.com real quick, you can just see a variety of different prices and metals that are on there that people report on. And I know that this is a feature that's relatively new, but it's just such a great feature. If you look at some of these prices, you can see charts. You can see where prices were posted from different areas of the country. You can see on copper, aluminum, brass. You can see what the national averages are on many of these metals. So check out iscrapapp.com if you're looking for kind of today's prices. But what I want to do is talk about the first half of 2023, where the markets were. And I'm going to start right with copper because that's everyone's favorite item to talk about. So if you look at the chart that's about to get pulled up, let's look at the chart. Now, this goes all the way to 2021. And just to show you where the markets were in the last couple of years. So if you look here, what you're going to see is prices hovering in the trading. These are all trading numbers. So if you see them, just know that I'm tracking them from a trading side of things. 2021, we saw 475, right? Kind of peaked out 475. Fast forward into March, right? We still saw $4.75. Why is that? That coincided with the Ukrainian-Russian war beginning. So now we kind of dip down. We get into the month of June. Look what happens here. June of last year, about a year ago, we started to see large market drops, with the market dropping out roughly a year ago, right? So this is July 11th, 2022 at 328. And today's market is hovering in the $3.75 range. So, think about the last 6 months. Let's kind of scroll to the beginning of this year. We're going to look at prices in January trading at 416. So from the 416 levels, we're down about 50 cents. Now, my opinion is these are still strong markets when you look at these prices. While this year's been a little tumultuous and we've seen prices a little choppy, and of course, they're down 50 cents. So no one's ever going to be happy about that. But they're still higher than I thought they would be. I thought that we would have hit those low prices last summer and they would have kind of hovered in those same areas. So while the consumer demands are starting to wane, it looks like the bigger picture recession may not be happening in the way that we originally thought. But what we are going to see with copper prices is not as much of a large increase as much as a stabilization. And stabilization is good. And this is something that I've talked about for years through iScrap. We want stable markets. They give scrapyards the ability to have their margins built in and not have them overinflated. Overinflated margins are generally due to the market trading all over the place. So copper prices being where they are, of course, everyone wants prices to be higher, right? You sell it for more money, you get more money in your pocket. But I think that this rate that we're seeing right now is really a very strong number. And if you told me 6 months from now, if I was doing a second half of the year recap, I'd be really happy with these prices if they stayed exactly where they were for the balance of the year. When we see some of the reported prices that are coming out on Bear Bright, I think they're very strong numbers. So if we saw these for the balance of 2023, they'd be in really good shape. Now let's bounce to the next metal that I track all the time. Whatever one gets pulled up next, we'll go with platinum. So platinum prices, again, these are very choppy, and these are going to coincide with palladium and not as much with rhodium, but a little bit. And let's just look at some of these numbers when it goes to catalytic converters. And of course, we always talk about rrcats.com. And when you see choppy markets like this, this is where having a 10-day price lock on your catalytic converter prices is really nice when you look at it from a bigger picture opposed to just short-term prices. But 10-day price lock for rrcats.com on all OEM catalytic converters, as well as free shipping. So, by all means, check out the rrcats.com website and all the different prices that you can get from there. But let's look at the platinum prices while we have them up. So we'll go all the way back to October 2021, hovering over $1,000, $1,050 per ounce. And the highest we saw didn't even hit $1,150 per ounce. If you look in March of 2022, again, you're going to see the Ukrainian conflict beginning. Prices kind of peaked out then. Since then, they've really been very choppy. They coincided with the big decrease in June of 2022 that we saw. You can see them dropping all the way down to the $820 range. And if you look at where they are today, they're above those dips from last year. They're still hovering around $900. But they're really lower from where they were, a couple of years ago. But platinum is a nice metal because not only is it used in those auto catalysts, it's also used in the jewelry industry and beginning to be used in some of the semiconductor chips, some of the specialty ones. So there is a bigger demand for it outside of just catalytic converters. And we all know the electric vehicle push is going to damper the catalytic converter market long term. But every news article that I read or things that I hear on the radio, we are so far away from having a fully electric market that we're really going to be in a very long-term picture. 30 to 40 years from now, I could see all the vehicles being sold, being electric. But until then, I heard a statistic this morning that last quarter, 3% of GM's sales were electric vehicles. So they sold like 650,000 cars. I'm giving round numbers. Like 15 to 20,000 of their vehicles were electric. So opposed to a company like Tesla that just sold 638,000 all electric vehicles, you have Tesla where they're 100% electric vehicle, right? Then you have other car makers like Rivian, 100% electric. But the Fords, the GMs, the Volvos, BMWs, Mercedes, Toyotas, Hondas, Kias, all these other makes and models, they're starting to put their toe into the electric vehicle market. But you're seeing pushback from a lot of consumers because when you have an average new car at $48,000 today, everyone doesn't want an electric vehicle because that's just not the lane that they're in. So the copper demand is going to, we're going to see where it's going to go on the long term. And if we can look at the nickel prices real quick while we're on the electric vehicles, we'll briefly look at those. Nickel prices, you can see back in December, we're hovering in the $30,000, $35,000 per ton mark. But since then, look what's happened. Drastic decreases in the nickel prices. Now, hopefully this will start to improve on the electric vehicle demand side of things. But we're looking in the last 6 months, we started the year at 30,000, a ton. And today we're 35% down. That's a humongous decrease. And for the balance of this year, I don't see the nickel markets really recouping. I read an article about the Chinese working in Indonesia and using some of their nickel ore in a different way to pull the nickel out to help make the batteries, opposed to just making 304 stainless, which is what it was being used for traditionally. But we still don't see a huge demand for recycled scrap stainless or nickel right now in the electric vehicle market. But that's kind of a commodity-wide thing overall, and we'll bounce back to the cats for a second. But at least you can see, I don't see a big demand coming for stainless. I know that automakers and the electric vehicle guys, I know that they need stainless, or they need nickel, I should say, for their batteries. But that demand just isn't there. I just said it with some of the numbers when it came to the scrap for some of these car makers. The demand still isn't there for electric vehicles. As much as the current administration wants to push for it, it's not there in the long-term way that they want it to be. It's growing. It's certainly growing. But nickel will ultimately be one of the metals that makes or breaks the electric vehicles. So hopefully that will affect the scrap markets positively. Palladium, another crazy price to look at. You look at this one again. You peak out in March of last year, right? Yay! What a great time to sell cats, March of 22. But since then, look what happened. $3,000. Let's look at January of this year where we started. January price is $1,700. So from 3,000 to 1,700, you have a 45% decrease. And since then, I mean, it's just continued to have a slow trickle down effect. And here we are from 1,700 at the beginning of the year to 1,200 now. That's 35% decrease. So we're seeing more decreases in the markets. And even though vehicle sales are up, we've talked about this in all the weekly reports. What do you see at car lots now? You see inventory again. That's not going to be good for the catalytic converter markets, because when they had no inventory and they needed metals in, prices were pushed higher in 2021. Then 2022, you had this very short-term increase in March, where then all of the suppliers and manufacturers realized that they could get more metals outside of Russia, right? That was just a spike to the system, a bit of a shock to the system. But since then, in 2023, the demand really has waned. We're now a year plus into the Ukrainian conflict. We're 3 years since COVID started. You have inventory supplies again. So unfortunately, these palladium prices have dipped down, but not nearly as much as rhodium has. And we'll pull up that screen. This is almost one of those screens where it looks like the numbers are fake. So when you check these prices out, I'm going to go all the way back to 2022 as well. We're going to look at these March numbers. Look at March. This is $21,000 an ounce. All right. Now let's look at January of this year. January of this year, $12,000 an ounce. So just from March to January, we saw a 50% decrease, let's say. Let's look at it from January to today. $3,600 an ounce. Let's go back to January. 3,600 and 11,000. Let's call it 12,000. So let's call it 12,000 down to 4,000. A 65% decrease in 2023. And as rhodium is used mostly in diesel catalytic converters and not many other main features, these prices hurt when you compare them to years prior. But the last 2 or 3 years. But when I look at prices back in 2010, 2015, rhodium prices are higher from where they were. So how to figure these things out? It's really very difficult. Do I think we're going to see the rhodium prices hitting 35,000 an ounce again? Sure. Do I think it's any time in 2023? Hell no. I don't even think we're close to that. But catalytic converter prices are down from 250 to like $80 on average right now, and that's a humongous decrease. You're looking at a 68% decrease in the catalytic converter prices in the last year and a half. But we knew for a while that it was just a weird market. You look at some of the prices that are reported for cats. You look at quotes that you get from rrcats.com or whoever your catalytic converter buyer is. Here's a national average being reported in the $80, $90 range. It's really nothing crazy right now. Here are some prices that you can see on rrcats.com. Price list that gets updated every day, a lot of ranges, because there's just so many types of catalytic converters, serial numbers, recoveries, etc. This gives you a good idea on ranges, and that's why you use a team at RR Cats to get your price quotes. So what else are we going to look at in the markets? We talked about copper, which of course is going to affect the brass prices. So we've seen yellow brass dipping down this year. We've seen the brass prices go down with the copper prices decreasing, but still very strong brass and bronze markets. So we're very happy about those overall. When I look at brass prices, I see yellow brass in the $1.80 to $2 range here, $1.89 national average as of a week ago when this was recorded. That's still really strong. You think about a 5-gallon bucket of brass that weighs 50 pounds. That's a $100 bill still on a national average. So these are good, strong numbers that we're seeing put out there. What else is going on the aluminum side of things? Let's look at the aluminum markets for this year. I think the aluminum markets is one that will have a long-term positive price picture, but short term, we're just seeing more of the erosion of the markets. If you look at the prices up on the screen right now, these were started being tracked in November of 2022. So let's just go January and start with the aluminum prices. You're looking at prices $39,000, and you kind of dip to today 30,000, right? That the next number is wrong. It was just either inputted incorrectly. But you're looking at a decreased aluminum market from 38 to 30. Those are huge trading price differences. I mean, you're talking again 35% decrease, and that's kind of what we're seeing this year. 2023 has shown the first half of the year to have about a 35% price decrease. And when I look at all the different markets, everyone always asks how I come to these different conclusions about scrap, right? I hold nothing. I got nothing in my warehouse right now that we don't pile things up because we think the prices are going to go up. I'm not buying like raw copper ore stocks or things like that. I just look at the demand. And while I do think that a soft landing so far has been achieved when it comes to some of the interest rates, I look at the growth and I just don't see a lot of growth taking place in 2023 and really in 2024. I heard a really interesting number talking about commercial real estate loans, right? And I always talk about commercial scrap because if you see big buildings going up, those need infrastructure, rebar, I-beams, a lot of tools go into those buildings being put up, right? Roads, ductile iron pipe for water and sewage and things like that. So the number I heard was in the next 2 years, $1.5 trillion in commercial loans are going to be coming up for renegotiating the rates. What does that mean? That they did a lot of those ARM loans where they just took a 7-year fixed rate, they had it in, and now the piper is coming calling, and those rates are going to go from maybe in the 3 to 5% range to the 8 to 11% range in the next couple of years. How is that going to affect the markets? Well, when you look at major cities, all these businesses moving out of the offices, now you have empty offices. You don't have large warehouses going up like Amazon and Walmart, and many logistics companies have been building for the last few years. Those are going to get slower because to borrow, if it's a $10 billion project and you have 10% interest, that's going to affect a lot of these rates, which is going to affect the demand for steel, which is going to affect the scrap prices. That's it. People look at like the infrastructure bill throughout the country. The infrastructure bill is not really touching a lot of physical infrastructure like bridges and roads. The infrastructure talks about a heavy development of 5G or 6G for our cell phones. It talks about internet going to rural areas of America. It talks about charging stations being put in and more electrification of solar panels. Sure, all these things do use metal, but the amount of metal that they use is really just a day-to-day usage. It may tick it up slightly, but when I hear about countries like India with 1.4 billion people, that's where we want the infrastructure. Go and pull up a picture of New Delhi and look at what their phone lines look like. Look at what their roads are looking like. I just talked to a friend of mine that got back from a business trip and told me about how buildings are crumbling. When you see major developments coming out of India and you see more U.S. companies investing over there, that's going to be the next big push that will affect the metals in a long-term perspective. And that won't happen in 2023. What do I mean? I mean that a huge demand for growth in India, for houses out in the suburbs, away from the cities, having people start to using their land, that's going to start the infrastructure push. That's going to start the commodities demand. That's going to start the copper, steel, aluminum really flowing out of the U.S. into places like India. They're going to use it for the infrastructure even more. The Chinese will actually start buying a lot more metal from America because they're going to want to sell stuff to India because they're so close. They can do it via railroad sometimes. That's going to be the major push that I see. that really lets the commodities market explode for a 2 to 4 year window, kind of like we saw in the early 2000s with China. We saw about a 5 to 10 year period where they were buying everything up. So when we start to talk more about India, that's going to be the next major push that we see. I just don't see it happening in 2023. The first half of 2023, we saw these prices are down, let's just say a roundabout number, 30 to 40%. Right? Maybe copper isn't down 30 to 40%, but many of the other metals are. Steel prices, while they're up right now, in the 6-month window, they're not up so much that it's making me overly optimistic to hold on to steel. I go to my friends' steel yards and they're empty. They're moving their inventory in and out. They don't think even on high grades like rotors that you're going to have huge price swings coming the latter half of this year. So, going into the second half of 2023, scrappers, I think that you're going to have very stable markets. I think you're going to see strong prices. I think that if we end where we are right now, we'll be in really good shape. But of course, what's going to change the markets? Worldwide events, oil prices changing, and while I don't go into politics on this stuff, the 2024 election, when that starts to put itself together, the second half of 2024, we're going to have an erratic scrap market because I don't think anyone's going to really know. I think it's going to be a very close race, but those will be major market moving events that we watch for to change the scrap demand. So right now, solid prices, solid demand. Hopefully this gave you a little insight. Let us know your thoughts. Let us know what you're seeing in the markets, and let us know if there's anything that you'd like us to talk about in the coming weeks. Check out iScrapApp.com. Continue to post your prices. Check out what other people are doing. And until next week, scrappers, I'll scrap you later.
Thanks for checking out this scrap video. For more exclusive scrap video content, please become a YouTube member of our channel today. Thank you, and I'll scrap you later.